Hello everybody, this is Toni Turner and welcome to the market now as of about 11 a.m. Eastern on Friday, March the 3rd. Before we start, I just wanted to say that I really enjoyed seeing so many of you at the Orlando Money Show last month. Thanks so much for coming by to introduce yourselves and for staying for my session. I really enjoyed meeting you. And now on to the market. U.S. stocks are currently trading lower today as investors are focusing on the Federal Reserve Chair Janet Yellen's speech this afternoon for clues on the possibility of an interest rate hike later this month. Yellen's speech comes after several other Fed officials this week painted an upbeat picture of the U.S. economy, which of course fueled market expectations for a March rate hike. Traders have priced in a 76% chance of a rate hike this month, compared with roughly 30% of the start of the week, according to Thomson Reuters. And of course, as you all know, the Fed meets March 14th and 15th with any announcement of a rate hike taking place probably about 2 p.m. on March 15th. Okay, on that bit of news, let's go on and look at our three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a chart of our benchmark index, the S&P 500 Spider, symbol SPY. This is the exchange-traded fund that closely follows our benchmark index, the S&P 500. And as we look at this daily chart today, we're going to start out by noting that when I captured this chart, the SPY was trading at $237.86. You see the small red candle here as it's down slightly on the day and kind of looking to fill the gap that was created on Wednesday when the SPY rose to yet another new all-time high at $240.32. Now, after Wednesday, yesterday's candle, Thursday's candle was actually a dark cloud cover, we call it. That's a candlestick terminology, meaning that it didn't engulf, but it's a longer red candle at potentially the top of a move that opens on the high, closes on the low, and in this case closed below Wednesday's candle, indicating here that the market at this short point of time or in this short-term chart is starting to wear out a little bit, and it makes sense. We've had a heck of a run up. It's been a ton of fun, but nothing goes up forever, including our stock market, and I could see here as we're again turning toward the possibility of a Fed interest rate hike, that the market could pull back here, could retrace a little bit. And quite honestly, a lot of us would welcome that. Markets can't keep moving up unless they move down first. And a move back here, a retracement, would certainly give us some great opportunities. As we look here, the 200-day moving average naturally is trading below price, as is the 50-day moving average, the green line on this screen, and the 200-day moving average, the black line. If we look at this trend line, rather short-term trend line, we see that the SPY is trading at quite a high premium to its 20-day moving average, its 50, certainly trading above its trend line, and trading at quite a high premium to its 200-day moving average. Please know that at times moving averages can act like magnets, and just as when we walk up a staircase, our feet move up and then go on the next step up and the next step up. If you think of the steps like a moving average, you'll kind of get the idea of how they work and how price works in conjunction with them. If we look down at the 14-day RSI on the center scale, we see that on Wednesday it was trading way above 70. 70 is the overbought line on the RSI scale. Today, as I captured this chart, the RSI had hooked down here to just about 70. So we're still pretty overbought here. And we're waiting to see, obviously, what will happen next. The MACD here is very positive, trading over the zero line. and the black line, the MACD line, is trading above the signal line still, as it would be. Of course, we're in a very nice bullish uptrend here. We cannot deny that, and we have to give the market a lot of credit. Still, if there is a little exuberance and certainly complacency coming into the market here, we will want to be careful. Okay. See, we have support here. That's what I wanted to say before we end. We do have potential support here at 236. We have more potential support here down at 235. And the 50-day moving average is coming in here at about just under 230 or 2,300 on the S&P 500 index. So we're in a wait-and-see mode. Can the SPY continue to move higher in this uptrend, or does it need to take a break again as we move toward Fed week? All right, our next chart today looks kind of similar. It's the PowerShares QQQ. This is the chart of the exchange-traded fund that closely follows our NASDAQ 100, which is the top non-financial stocks in the NASDAQ stock market. As I've told you before, the top components of the Qs are the big guys, the big momentum stocks: Apple, Amazon, Google, Microsoft, Intel, Netflix, Facebook, those guys. And they've had an incredible run here. As you see, the QQQ has marched right up its 20-day moving average. Really, really a healthy move up. And of course, all good things at some point come to an end. Again, we do need the market to move down to be able to move up again. Apple has led a lot of this charge. It's had a fantastic run up. Now we see again, as we move into the weeks before the Fed meeting, I should say, whether the Qs can maintain this altitude or not. Now they are trading again at quite a premium to their 200-day moving average, actually 11% premium, which is pretty darn high. So can it maintain this altitude? We'll have to see. Again, it made a new all-time high on Wednesday at 131.68. We have support here down at 130, potential support I should call it. We have support down here at 130, then down at 129, and more potential support down here at 126. So we'll have to see if we can continue higher here or not. Now, like the RSI on the SPY, it is starting to hook down here. It's actually starting down sooner. It's actually making kind of a bearish divergence here, because as the QQQ started up here and had a new high on Wednesday, the RSI, in fact, was rolling to the downside, hooking lower, and it was saying, no, I'm not impressed with that new high. So we call this a bearish divergence when the indicator is moving lower while price is moving higher, which could show us that maybe where we can't see it, there is some weakness coming into the Qs. We also do note here as well that the MACD line, the black line, has moved into, and you can't see it here, barely below, certainly into its red signal line, also saying that it is losing some of its exuberance and some of its energy. So maybe we see a pullback in the NASDAQ in the coming week. We'll have to keep an eye on it. Okay, our final chart for the day is a chart that I'm not sure we've ever looked at, but I found it interesting. And the reason I'm looking at it today, whenever the market gets overbought, as it is now, whenever it shows that it may go into signs of more volatility, which I suspect it will before the Fed meeting, I tend to move into arenas, stocks, industry groups that are out of the spotlight, That's how I sleep better at night. I'm looking today at Guggenheim S&P Global Water ETF, symbol CGW. Now, CGW offers exposure to companies across all capitalizations positioned to benefit from the global demand for water. The global demand for water, and I don't see that abating anytime soon. The top components in the CGW are American Water Works, Danaher, Pentair, United Utilities Group, Xylem, companies like this all around the globe. Now, what the index does here, which is kind of interesting, it seeks to benefit from new infrastructure having to do with delivery and quality of water. So there you have something we all have to have, water, and this ETF seeks to benefit from new infrastructure, and we know those are two good words from what our administration has planned. So I think all of this together may be a good place to be. Now, last year, the CGW was trading above $31. It pulled back in December down to just above $28 and has risen ever since very quietly. Nobody talks about water much anymore. I sincerely believe that in coming years, water is going to end up being a commodity that is going to be very, very important. And so what I am looking at the CGW here with that in mind. Now, at the moment, it is trading up near, with its RSI, it's trading up near the overbought region, as you can see, up near 70. It's trading at a premium to its 20-day moving average, although this 20-day moving average has acted like a very nice trend line here, and that's good. What I would like to see here, I'm not going to jump in right away, I'd like to see the CGW come back in here. If the market comes in a little next week, I suspect the CGW can do so. Maybe it comes back down toward 30 to its 20-day moving average. I would even be okay with it coming down to its 200-day moving average, right around 29.75. I would then want it to bounce and start potentially moving higher. If it does all this, I will potentially be nibbling on the CGW, and of course that would depend on the market environment as well. As you all know, if the CGW falls below the 50-day moving average, which is now coming in at about 29.35 or so, if it were to fall below that line, or close below that line, I wouldn't want it anymore. But if the CGW can pull back a little here and then start higher, it is definitely something I'm going to keep an eye on. Now, this is not a day trading opportunity. This is a conservative place to be if the market gets volatile, but it may have some upside here, potentially back toward the 31 line. Okay, now we'll go on to next week's economic reports. But first, please join us on Monday, March 6th for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend the live session, no problem. The recording of our session is available just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now on to the economic reports for this coming week. We don't have much going on Monday or Tuesday. On Wednesday, we have the ADP employment change report and, of course, our usual crude inventories. On Thursday, we have jobless claims and our usual nat gas inventories. And on Friday, we will have the jobs numbers with the unemployment rate. And of course, these will be the last monthly jobs numbers reported before the Fed meeting on March 14th and 15th. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading profits and your trading knowledge. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.